Alright, how's it going everyone? Welcome back to another video of Cup of Joe Investing. As you can see, we're in another new environment. We're actually in my dorm room in college. We have this new whiteboard with all the information so that I can not have to read from a book, and you can also see information for yourself. Okay, so today we're going to talk about Zuora. So before I get into the quantitative data, which is all the financial information, I actually want to talk about the qualitative data and what Zuora is. So Zuora is a stock that recently IPO'd this year actually. The CEO is called Tien Zuo, and his idea is the subscription economy. He actually coined the idea. He has a book called Subscribed in which he describes what the subscription economy is. I read it, I highly recommend it, I believe it's the future. Essentially, the subscription economy is where all these companies are transitioning from one-time sales and one-time products to multiple recurring revenue. So instead of paying for a product once, you pay for it every month and you get to use it when you want to use it and how you want to use it, which is better for the company because they're getting revenue that they can count on every month and that they can build upon. But also it's good for the consumer because let's say you buy a product, right, and you don't want to use it anymore, or you got to pause because you can't afford it. You can just cancel the service and it's fine. It's like Netflix. It's like once I finish watching Stranger Things, I don't want to pay for Netflix every month, so I just cancel it. It's a lot better than if I were to pay Netflix $1,000 a year to watch everything and then I don't even use it. So that's what the subscription economy is. And Tien Zuo is like the CEO of the subscription economy. Essentially, he used to work at Salesforce. He was one of the original employees, made it all the way to VP of marketing and sales. And what he decided was to start his own company. Started it a couple of years ago called Zuora. And what they focus on is revenue and billing management of subscription companies. So if you're a subscription company, there's a lot of different billing and revenue that you have to account for that all the ERP systems just don't do. So Tien Zuo came up with all this new formatting and all these new systems in order to account for it. So let me tell you about some more qualitative data about Zuora. They were rated one of the best places to work by Glassdoor. Glassdoor rates all these places. And they were also rated number one by third parties that rate ERP systems for subscription companies. And let me tell you, I follow them on Facebook, and they call their employees ZEOs, and they all seem very happy on Facebook, so I'm sure he's running a great company. Some of their customers are not only music companies and TV show companies like Netflix that have subscriptions, but the whole idea is that companies that you wouldn't even think that need subscription revenue management actually are starting to go into it because they want to. Companies such as General Electric, such as Caterpillar, DocuSign, Intuit, Time UK. There's actually a whole page on their website full of customers. Let me give you an example. You wouldn't think of Caterpillar as a subscription company, right? What do you mean? They sell you a truck and you pay for it every month? Well, yeah. So essentially what you do is you buy a Caterpillar truck, and these Caterpillar trucks are all machine operated now, right? They don't have a human in there digging up rocks. One, because nobody wants to, and two, because you can make an AI to do it for cheaper. And what Caterpillar does is they have all these sensors in their machinery that allow them to track what's going wrong. So let's say the transmission's messing up, then if you're paying for the subscription almost like an insurance every month, Caterpillar will just send a guy out there, fix it even before it's broken sometimes, and that way you don't have to buy a whole new truck because that's a big expense for a lot of companies. Also, companies love Zuora because they grow with them. So essentially, they'll start maybe with one product, with Rev Pro, with billing, and eventually they'll start to figure out that Zuora is one of their best assets in order to grow their subscription revenue and their recurring revenue, which of course they all enjoy. And so the more money these companies make, the more money they make with Zuora, and the more Zuora can charge for their value. Also, they're still in early days. So the CEO, even this quarter, said a couple days ago that though there's plenty of companies charging for subscriptions, there's also plenty of industries that haven't adapted this model yet. And what he believes is that a bet on Zuora is a bet on the whole subscription economy. So really, Zuora isn't one stock. It's really one stock that encompasses a multitude of stocks. And the reason is because Zuora doesn't rely on, it obviously relies on its products, but it also relies on all these companies eventually transitioning into the subscription. And since they're the number one and one of the only they're not an ERP system, one of the only management of revenue and billing systems out there, they can just acquire more and more customers as the years go on. They're also expanding to international. Obviously, Europe and Asia, especially Asia, is exploding, and they plan to capitalize on that. Old ERP systems are dying. Old ERP systems can't keep up with dynamic revenue and dynamic billing. Think of it this way. If you were a previous company that sold, let's say, books, and you sold every book and you could keep track of how much you sold it for, when you sold it, then that's fine. You could just use a regular ERP system. However, if you're collecting, let's say, subscription revenue for a library, and some people like to add on the features, some people cancel their service, how do you predict these things? Because you can't run a company without predictable revenue and proper storing of accounting information. The only way to do it is with Zuora. Also, they closed 30 new deals just last quarter. 30 new deals that are pretty big because, as you're going to see on the financial side, they are growing exponentially. So let's get into the quantitative side of things. So they currently have $40 billion in subscription management that they manage for all these companies, right? Again, you can check these companies on their website. There's so many, I couldn't even list them all. Also, they did a research, they have data scientists that figured out that subscription businesses grow 5 times faster than usual S&P 500 businesses, especially the ones that charge per usage. That's a big thing nowadays, charging per usage instead of just charging for the whole package. Using usage billing led to 50% more growth, they also found. And their annual contract value per customer of $100,000 grew by 27%. So clearly, all these companies are sending a lot of value into Zuora and believe that they are going to continue to grow with them. Of course, since they are a software company, all software companies have amazing margins because there is not a lot of manufacturing, there's actually barely any overhead, and they have a gross margin of 78%, which is great. They have $61.5 million in revenue, which is up from last year. However, they do have a net income loss of $18.5 million, which is expected. They're a growing company. They IPO'd last year, and when you're expanding to all these countries such as Europe and Asia, you need to build new headquarters, new infrastructures, hire a lot of people. It's very common. However, the best part is that they may be losing money, but their balance sheet is pretty pristine. So they have $174 million in cash equivalents and short-term investments, and they have $14 million in short-term and long-term debt, which gives you a net value of their balance sheet of $160 million. So even if, let's say, a recession happens and they're struggling, it's always important that you have some kind of money on the balance sheet that you can cover your expenses. Guys, this is one of my favorite stocks. Zuora is what I believe the future of the subscription economy. If you don't believe it, I mean, like, there's so many companies, like Apple had a recent event where they announced Apple News and Apple TV Plus, and their their services revenue is growing at 30%, and pretty soon their services is actually going to make them more money than they make off iPhones, and they make a lot of money off iPhones. Remember, they're selling these things for $1,000 nowadays, which is why I don't have a new iPhone. Anyway, that's all for today. Remember, we might not make sense, but we do make dollars. Let me know what you think about that outro. I know it doesn't make sense, but it makes dollars. All right, see you next time.